Hello and welcome to the channel. My name is Eve, as you may know, and every other day on this channel I bring crypto to your understanding. Today I want us to talk about what has been going on in the market so far with Shiba Inu's pump. This is Shiba Inu. Let me get these things off. By the way, I will show you how to use this Fibonacci retracement lines later on. I will show you all of that. So this is Shiba Inu. Now I show Shiba Inu here because many people have been upset that why didn't they just invest in Shiba when it was like here. Okay, now what you have to understand is that investing here or investing in a meme coin is very risky. Now I purposefully made this video because many people have been DMing me asking me that what do you think could be the next Shiba? Do you think this other meme coin is good? What are your thoughts? The problem with investing in meme coins is that they can stay here at this level forever. Just imagine that you invested here. You will have to stay for about 6 months without any profit. So imagine that you invested say $1,000 here and this was your entire capital, and you invested it in Shiba Inu because you heard that some people made millions here, because yes, some people made millions just here. So you invested $1,000 hoping that this will be some kind of consolidation and it will spike up again. If you invested here, it will take you 6 months to get your money back. Like, this is if you do not sell. So if you invested here and waited for 6 months and this 6 months came and you did not sell, then you will take your profits maybe here or here. Well, by here you would have been a billionaire, but who would wait for that long? Many people won't. What you have to understand about this is that when your money is going down, when you invest, say, let's say $100, you invest $100 and it goes down to $80. Most people will sell out. It's not like selling out is bad, but it is the wise thing to do. You always have to be trading or investing with a stop loss. Now, you don't literally have to put a stop loss on your trades, but you need to have even a psychological stop loss. If you invest $100 here, it should be in your mind that, okay, you are willing to give, say, $10 for any price movement, any volatility in the markets. So if you invest $100 and you're hoping that it can go to, say, $150, that's 50% gain, you should be able to sacrifice, or you should be willing to sacrifice 10% of the $100 for any kind of volatility. Mostly this technique is used by people who do leverage trading, but even if you are trading on the spot market, you always have to have this psychological stop loss. So if you're investing $100, be willing to lose $10 or $15 to make, say, $180. So let's say you invest $100 and it goes down to, say, $80 and you did not have any stop loss. It can go down again to $60 or to $50 to $40 to $30 and finally to $2. Because those who invested here, and this is not a complete chart, but if you look at a complete chart of Shiba Inu, if you invested, say, $1,000 in Shiba Inu in September 2020, by November, that $1,000 will be worth $2. Do you understand? The $1,000 that you invested will be worth $2. So imagine that a creator or some influencer told you to invest $1,000 in Shiba Inu, that maybe someday it will be worth millions, and you invest the $1,000 and say 2 months later you see your $1,000 investment at $2. You would sue that person, or you will unfollow or unsubscribe, or I mean, like, you can literally take that person to court, or that is if the person advised you. I'm just saying, there are many people who are wishing that, oh, if I had invested $1,000, if I had only invested $100. You have to understand that this is not a normal chart. Look at this place here. This was the first pump, this was the second pump, and this is the third pump. And so from here to here, there has been no pump to here. So this is like 6 months. From here to here, it's like 6 months. And even if you're actively trading, with $1,000 investment, in 6 months you should have at least $5,000. That is if you are losing most of the times. So how is it that people really think if you had just invested $1,000, you will wait for 6 months? Many people do not have that type of patience. And what you need to understand is that with investing in any crypto, there is no assurance. Like, there literally is no assurance whatsoever. It could stay like this forever. So it's not like you actually, like, you know that it will one day go up like this. It's not clear that it will ever rise. That's what many people need to understand. So when you invest, say let's just say that you invest here, say halfway, and you invest here, and you keep on waiting. When do you think it will ever rise? Some of them never go up, like never. So many people will say if you invested $1,500, it will be worth $1 billion, but it could just as well be worth nothing. This is the reason why most people that have a huge amount of money don't want to invest in these meme coins or even in altcoins. Some of them would rather just invest in Bitcoin, and Bitcoin will have about 70 to 80% of their portfolio, and Ethereum will have, say, 30% of their portfolio. And they won't even mind if every other coin is going, say, 10x, 50x, 100x. This is because these people have a ton of money and they cannot just risk that money for extra gains. They know the risks involved in crypto. And there are many people now who are busy buying up Shiba Inu. If we look at this week here, many people are buying Shiba Inu. Now, do I think Shiba will still go up? Let's check that out. We are on the daily time frame of Shiba Inu. Let's go to the 4-hourly. But by the way, this is something that you can recognize here. You guys know I always like to make my videos educative. So if you follow up on my videos, you will learn a lot of things. So here we had a symmetrical triangle. Now, what is a symmetrical triangle? A symmetrical triangle is when you have a breakout here, a breakout in price, when the price rises and consolidates, but as it consolidates, it gets narrow. So we can see that here. So we had a rise like this. It started consolidating here, but getting narrower as it's going to the end. So that's what was happening with Shiba here. Now this is the 4-hourly time frame. So in the 4-hourly time frame, you will see that the consolidation was longer. As you zoom in, that's how the consolidation shows more details about what is going on in the markets. So here we can draw our lines, our support and resistance lines. So we have a support line here. We're using the weeks to be more accurate with the figures. So let's see. We use those this week here. Okay. All right. So you see, now it begins to make sense. But when you just look at the chart, you may not see this kind of consolidation here. But it's in some way, it is like a bull flag. Now, a bull flag is always represented in this manner. You have it like this, and you have some kind of flag like this. Yeah. So a bull flag will look like this. But this is a symmetrical triangle here. So to know how far the price will go when it rises or when it breaks out of this symmetrical triangle, you will measure. And what does breakout even mean? Let's explain that. So if you take here, you take the highest wick from here and the highest wick from here. So this, our line, the resistance line, is touching the highest wick here, and you also take the highest wick here and you draw the line like this. and you draw the line like this. Okay, now you will notice here that this candle closed above that line here. This candle closed above that line, and this one, well, this was a very long candle. So if I was here, I would try, well, my strategy anyway, I will try to buy around here. I will try to buy around here, because I see that the price goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down, goes up. As it goes down here, and we're getting closer and closer to the end of this consolidation, I will buy, because you don't know exactly which candle of these ones will be the one to go up and close. Now look at this one, for example. It went up and it closed right here, so from here to here would have been a lot of gains. Let's see how many percent you would have gained if you invested here. So this would have been 16%. So $100 here, you would have had $16 just from here to here. So that's how it works. So I'll try to buy it as it gets closer and closer to the end of this symmetrical triangle. So basically that's it. So to know how far this will go up, you need to measure from here. So the distance of I think I've mentioned this in my other video. If you have watched my video on technical analysis, you will understand this better. So the distance from here to here is how far it will go when it eventually breaks out from here. So here we just take this and we put it here. So if it finally broke out, to know how far it will go, you put it here, and there you have it. You know that this is how many percent? That's 52%. So this would have been 52%. So $100 invested here would have given you $52 profit. So here, if I was trading Shiba, this is what I would have done. I would have bought here, around here, and I place a selling order here. When it reaches here, it will automatically sell. That is what I would have done. And here we had a bit of a consolidation, and then it pumped again. Now this is in the 4-hourly time frame. So here, and this is something that I'm actually thinking of maybe, but if you look at here, it is kind of the same thing that happened here. So Shiba Inu may pump again. Well, you have to understand that this is not certain. It can also consolidate like this. Most of these symmetrical triangles tend to break out to the upside, but it can as well go down. It is the same thing that happened with Cardano. I was waiting to take that trade, but it broke and it went to the downside. So to know how far it will go when it breaks to the downside, it is also how far it will go if it broke to the upside. So if it went to the downside, you will also have a loss of 50%. That is if you do not set your stop loss. But if you have a stop loss around here, it will have sold out before it finally reaches here. Okay, so that's it. So here what I'm seeing here is Shiba Inu trying to play the same game that it did here. Now we don't know if it can go up and go down. We can as well just leave from here and we have a waterfall here. This can happen. Or it can leave from here and comes here, finds support at this previous resistance level here, and goes to the upside again. That can also happen. So at the end of the day, you cannot fully predict it. It is not about prediction, all of this, and some people like saying that I predicted. What you did is you read the charts. It's not about prediction, it is about observation. So what we're simply doing is we are observing what is going on in the markets. We are not predicting anything. So Predicting how far a coin can go is maybe looking at the demand, and you say that if this demand stays this way, and even at that, it is still just conditional. It is not a prediction. It's not some kind of prophecy. Okay, so, and there are many people who see these zeros and they think that Shiba will one day become, say, a cent. That won't be possible, because for Shiba to become a cent, it will need about, say, $4 trillion market cap, and the entire crypto market is about 2 point something trillion dollars. So that is not possible for a single meme coin to have that type of market cap. Here I think Shiba can go, if I'm looking at this as a bull flag and I look at this from this breakout right here to about here, and estimating that the breakout happened again somewhere here, for example. Anyway, let's see. Let's look at it from this perspective, that it went up like this. Let's just say it went up like this. If we have this kind of if it went up like that, and also from here it went down like this, consolidated here. If it went down like this, yeah, for example, let's use the hourly time frame to get a better picture. All right, yeah, so here we see actually trying to consolidate inside of this triangle. So let's just say that this, let's say the breakout was here, and we are taking, for example, that this is, we'll take the highest point here, and we say this might have been a bull flag, and we take this to here. This would be about a 70% increase in Shiba's price from here. Yeah, this is a 51% increase from here if Shiba breaks out to the upside. If Shiba breaks out to the upside, it will go about 51%. Shiba going again, say 2 to 5x from here is not possible. I hate using the word not possible, but this will really not be possible, because that will mean that Shiba will overtake Polkadot, overtake Solana, overtake Cardano, and definitely overtake Ethereum. It will be complete ludicrous for this to happen. This will not even make any sense whatsoever. If Shiba goes again, say 3x from here, it will be shocking to me. So, but anyway, if you're invested in Shiba, I hope you do find, you do make some profits, but I started telling people to start taking profits when Shiba was here. And when it came here, I reminded people again that this is a meme coin and it can descend at any time. Someone even commented on one of my videos that he took his 10x profits here. So after taking the profits, it descended here. So, well, good for him. But apart from that, I don't see Shiba going, say, 3x again, or making this same kind of move like from here to here again. That will not even make any sense whatsoever. Yeah, there are many people out there who are like praying that Shiba should go to the floor. I'm not. I'm just looking at the charts, and I believe that, or I think that Shiba could go here. If Shiba comes down until here and pumps just a bit, that will make this look like a head and shoulders pattern, and it will be bad news. So the best way is just to take your profits as you go up the mountain. Do not wait that you want to invest $1,000 now in Shiba and have $1 million, because Shiba will need 1,000x from here for anyone to invest $1,000 and get $1 million. So all this money that everybody is talking about cannot be possible anymore. So this is Bitcoin on the daily time frame. Let me put it on the 4-hourly. And now on the 4-hourly, we can see how the price movement is happening in detail. Now, how do we place these Fibonacci retracement levels? How do we place them? Because I know many people get confused when they see lines like this. They are immediately like, what is this and how was it placed there, and why should this trade respect these lines? Like, what does these lines have to do with this trade? These lines are the retracement levels of this trade. Now, if you use these Fibonacci retracement levels in any chart, it will work exactly like this. Why? Because math says so. As I said earlier about Leonardo da Pisa, he devised these numbers, and later on people started using these numbers on trades and they started working. Like here, let me just show you how you can use this by yourself. Now, the reason why I am showing you this is because you can know what to buy, but knowing when to buy and when to sell will be the problem. For example, if we look at Bitcoin here, we will see that this is a descending wedge right here. This is a descending wedge right here. Now, how is that a descending wedge? And don't worry, when you get used to this, you will easily see the patterns. You will not need anyone to tell you. Just that you need to be consistent about it. Yeah, you can see that this is a descending wedge right here, like a falling wedge. Yeah, a falling wedge right here. Now, so when Bitcoin broke out of this descending wedge or this falling wedge, how far it will go up here is exactly the distance from here to here, or the widest part of that wedge. So let's take from here to here. Like this. So you see that here it is somewhat exact to how far Bitcoin went here before it retraced down. So let's say this other part of the chart you could not see, like the trade was still happening and Bitcoin descended here. So you have no idea where the resistance levels will be, where the support levels will be. You have no idea. So from here, what you will do is you take your Fibonacci retracement, and how you draw it. So Fibonacci retracements are simply an automated way of drawing your support and resistance line. So instead of actually drawing the lines like I did here, you can use your Fibonacci retracement tool to just get the support and resistance levels. So from here we can see that, okay, this is where Bitcoin broke out of this falling wedge. So if you click on your Fibonacci retracement tool and you click here, you click from the bottom, from where it broke until where your price target is, to our estimated price target. So that is our price target here. This is our price target, and when you put it this way, you will get the Fibonacci retracement levels. Now you will notice here that this chart actually, it's almost like it follows the Fibonacci retracement levels. You can see here the line on the Fibonacci retracement is acting as the support here, and here it almost acted as resistance, and this is our golden pocket. So the golden pocket is a region between the area of 0.618 and 0.65. Now it is a golden pocket because not all price targets meet with this 0.618, and 0.618 is one of the most important levels in the Fibonacci retracement tool. So the most important levels actually are 0.382 and 0.618 and 1.618. So these are very important levels, and by very important I mean that they can both act as strong support and strong resistance. So here we see that this candle closed above our golden pocket, so we had a boost up from this one. And since this one also closed above 0.382, the trend also continued up till here. This one closed below 0.382, but because overall we are in an uptrend, the trend continued until here. So you can see here that it also closed above here. When it closes above here, you have to do your another technical analysis here. Then you can apply the same Fibonacci retracement tool here, and that's how you do it. But this Fibonacci retracement tool is a very good tool for your trading. You can use it to know when to enter the market, and you can use it to know when to exit the market. For example, if this candle here did not close above this golden pocket, then we know that this price is most likely to retrace down here. Okay, but since it closed above the 0.618 region, then we know that the price has to continue. Since this one also closed above 0.382, we know that the trend still has to continue. So these are the levels that you have to look out for when using the Fibonacci retracement tool. It is a very good tool. I use it all the time. It is actually one of my best trading tools. So basically that's it. Basically that's how you place your Fibonacci retracement tools. Anyway, I will be doing most of this technical analysis on this channel. I will be taking cryptocurrencies, especially those that you guys propose in the comments. If you have any in mind, let me know. Maybe in the next tutorial I will include it. I will be doing most of this on this channel. So but for now, I just wanted to show you this Fibonacci retracement tool so that you can also do it by yourself. There could be times when maybe I will not be available, or you may need help with your crypto and maybe someone is not there to help you. So it's always best if you also have an idea on what to do. So we can see here that this is basically the same thing that is happening. If we place our Fibonacci retracement tool as we just did, you'll see where the price retraces. You'll see here that this is our golden pocket right here, and this was a downtrend. So downtrend is the same like opposite for uptrend. We had a decrease in price. This closed below the golden pocket, and it wanted to say close above, but it did not. And then it did the same thing here. This green candle right here, closed inside, or just a bit above, just a bit inside the golden pocket, but we see that another red candle just followed and the price kept plummeting. Anyway, so that is how you draw your Fibonacci retracement levels. Just always watch out for the 0.618 levels, 0.618, 0.38 and 1.618 levels. Thanks so much for watching this video. I hope you did understand. If you did understand, please let me know in the comments. If there is any other thing that you will need help with, let me know. If you have some particular concerns, or maybe you want me to talk about some other crypto, let me know. And I think I will be bringing more and more other crypto projects that I think might do well in the next coming days. And so yeah, this here was just a breakout right here, and I was waiting for this breakout. You can see here that this is a strong support line right here. This is a strong support line right here, and this green candle just broke out of this support line. And you can see that even just before the green candle, you can see a bullish engulfing pattern right here. The big red candle and the spinning top that is fully engulfed by the big red candle is a bullish engulfing pattern. This means that the price will go up. So you can always look at these things coupled up with the rest of your knowledge in candlestick analysis. You have to also have that in mind. Many people just look at these indicators and they completely forget about the candles themselves. Okay, when you see a candle with a very long wick like this, you know there is very strong buying pressure out there, which means no one is willing to sell. And if we look at here, overall we have more longer wick candles below than on top, and you can even see that here. which means many people are buying. And when many people are buying, it means that they all know that we have not seen the top yet. And remember, this was like, yeah, this was the top. So anyway, thanks so much for watching the video, and I will see you in the next video.